What is cryptocurrency? Why does it have value? How can you make money from it? What are the differences between Bitcoin, tokens, coins, mining, NFTs, meme coins, and all those other confusing terms? Today we will dive into all of this in detail. This will be the video that will answer all your crypto-related questions. It's actually titled, What is Cryptocurrency and Blockchain for Beginners? So let's go. So what is cryptocurrency? Cryptocurrency is digital money. It's somewhat like the same numbers you see in your bank account, but there are a few significant differences, and we will talk about them right now. Look, the first difference is that cryptocurrency exists only in electronic form. In other words, it cannot be issued in the form of coins, banknotes, and so on. The second important difference between cryptocurrency and traditional so-called fiat money, to jump ahead a bit, fiat money includes rubles, dollars, and euros. So everything we deal with, we are used to, or rather operate in our everyday lives. The second difference of cryptocurrency is that it is based on blockchain technology. The concept of cryptocurrency and blockchain is essentially inseparably linked. Here, we need to break down the second concept, what blockchain actually is. Blockchain translates from English literally as a chain of blocks. It's nothing more than a way to organize data. So, blockchain is the technology that cryptocurrency operates on. It is a decentralized database made up of a chain of information blocks. So, if we take blockchain as a structure, we see an endless chain of blocks, where each previous block contains records of the transactions from the previous block. I didn't understand a thing. Well, that's very interesting. What is the main distinguishing feature of blockchain and why are cryptocurrencies built on this technology? Blockchain has several key advantages when it comes to using it for financial instruments. The first advantage, blockchain as a rule is open. So if we talk about the banking system, we don't see where and how the money moves. Where's the money, Lebowski? They're down there somewhere. Let me take another look. In blockchain, the situation is different. Almost every network, like the Bitcoin network or the Ethereum network, has block explorers. And you can see which address sent what cryptocurrency and where. So the information in the blockchain is open, but at the same time it's anonymous. So you can see the wallet addresses that sent the cryptocurrency, but you don't know the specific people behind those wallets. Now that's a different story. This is where we should have started. The second important advantage of blockchain is that it is distributed. We're going to dive into the Bitcoin blockchain right now. Got it. There are different blockchains. Some of them are more centralized, while others are less centralized. But we're specifically talking about the example of the Bitcoin blockchain. It is distributed and doesn't have a single issuer, so there isn't a single central bank or regular bank or any other organization that controls the issuance. Bitcoin essentially is controlled by miners. Who are the miners? These are the people who mine cryptocurrency. We'll talk about them in a bit more detail. We're dying here like animals. Bitcoin blockchain is distributed, decentralized, and no single entity or can control it. It is also secure. Actually, this is the very essence and strength of Bitcoin, which is why it has become so beloved by people. And the third advantage of the Bitcoin blockchain is that it is quite secure. The point is that each block contains a hash. The information in the blocks cannot be changed because each block is encrypted, and each subsequent block contains the hash of the previous block. If someone wants to tamper with the transaction records in a block, they would have to completely change all the existing blocks. Is this theoretically possible? Yes, it is theoretically possible. Bitcoin has a problem known as the 51% attack, to take 51% of all computing power and direct it to somehow change the blockchain. Bitcoin. Theoretically, it is possible to do this. But let's be honest, this is not beneficial to anyone. It is beneficial to me and the people who are most likely behind Bitcoin. It is beneficial to everyone that Bitcoin is worth some amount of money, and in fact, that people can use it. Now that we've figured out what cryptocurrency and blockchain are, let's move on to the most exciting part. So what exactly is Bitcoin? Bitcoin is the first and most popular cryptocurrency created in 2008 by a user under the pseudonym Satoshi Nakamoto. We still don't know whether it was really Satoshi Nakamoto or some group of people. Right now, there are all sorts of popular theories suggesting that maybe even Elon Musk created Bitcoin. But in reality, it doesn't really matter to us who created it, whether it was Elon Musk, agents from the State Department, or maybe some security forces from the Russian Federation. I think you got it mixed up. Probably the most important thing is that as long as Bitcoin remains this anonymous, decentralized network, it will continue to function and interact. And the whole essence of Bitcoin and the faith people have in it is based precisely on this. If this principle is violated, there is a high likelihood that Bitcoin will be worth much less than it is now. Because Bitcoin essentially, what is it? It's digital gold. So if we're talking about the analogy with gold, we have gold bars. To extract gold, you need to drill a mine, extract it, build some processing plants, and so on. So you need to spend money. And the most important thing is that the supply of gold in nature is limited. The essence of Bitcoin is that it is also limited. Here we smoothly transition to the concept of tokenomics. Why are people so obsessed with Bitcoin? What is the unique feature of Bitcoin? Why is it currently worth $92,000? In simple terms, tokenomics is a set of rules that are initially embedded in a cryptocurrency when it is created and launched. They include values like the total supply of coins, the maximum supply, how they will be issued, and so on. Of course, fiat currencies like rubles, dollars, and euros. Other currencies also have a similar system, but it's important to understand that they can be printed and produced by the central banks of the countries that issued them, thereby creating inflation. So, if the government wants to slightly dilute the money supply, making its population a bit poorer, it prints money, the overall money supply gets diluted, and as a result, you get an effect like inflation. Bitcoin is initially a deflationary instrument, that is, the emission of Bitcoin is initially limited to 21 million coins. Bitcoin cannot be released unless code is broken, which isn't profitable. Imagine you created Bitcoin, now worth $90,000. You control much supply. It's beneficial for people to buy Bitcoins from you at market price, exchanging money for your Bitcoins. 50 or 100 years, it might be seen as a financial pyramid scheme. But now Bitcoin seems anonymous, decentralized, and secure. Plus, it's a good financial instrument. Maybe someday in 50 or 100 years, this will all come to light and it will turn out to be a brilliant financial pyramid. But for now, Bitcoin looks really quite anonymous, decentralized, and safe. And plus, it's just a pretty good financial instrument. So if Bitcoin is our digital gold, then obviously we need people who mine this digital gold. These people, as you might guess, exist. We call these people miners. And before we dive into who miners actually are and how they work, I invite you to subscribe to our amazing Telegram channel. The link to it is below this video. There are many more useful articles, posts, podcasts, and of course funny memes about crypto there. So subscribe, click the link below this video, and we'll stay in touch a little more often. Let's get back to the topic of mining. As you already know from the video, the blockchain consists of a chain of blocks, and each block has its own unique hash. Each previous block contains the hash of the transactions from the previous block. And actually, this is how we build our entire Bitcoin blockchain. As soon as a block is completely filled, in order for the system to continue functioning, we need to create a new block in the Bitcoin blockchain. And this is the problem that mining solves. So, to put it simply, they use super powerful computers to solve mathematical problems, various equations, and then they add blocks to the Bitcoin chain, for which the network rewards them. Until 2015-2016, you could mine Bitcoins just using a regular computer. You take your computer, connect it to the internet, turn it on for mining, and basically, you mine your Bitcoins. And indeed, the people who mined Bitcoin before 2015-2016 mined over 80% of the total supply for themselves. In 2017, they mined over 80% of the total supply, but why? So right now, 92% of Bitcoin has already been mined. Now, in order to mine Bitcoins, there are huge, just gigantic mining farms, and all the electricity consumed for Bitcoin mining is comparable to the energy consumption of some European countries, and not just European ones. Let's summarize what we've just discussed. Look, we have the concept of Bitcoin. Bitcoin is the first and main cryptocurrency. Bitcoin is mined by miners. Miners, accordingly, interact with the blockchain and add new blocks to the blockchain so that Bitcoin can function. In just about 10 minutes, you've already learned what Bitcoin is, how it works, what blockchain is, and what cryptocurrencies are. So the first thing we need to understand about altcoins. The thing is that altcoins mostly have their own blockchains. There are different blockchains. There are first-level blockchains and second-level blockchains. First-level blockchains are, for example, Ethereum and Solana. There are layer 0 blockchains, so to speak. So that's Polkadot and Atom. The most important thing we need to understand, so everything we've discussed about Bitcoin and how its blockchain is structured, this doesn't mean that the blockchains of all other altcoins are structured the same way. Each blockchain has its own features, its own pros and cons. Some are more secure, some are more decentralized, some are faster, and some are slower. But we need to understand that each blockchain is unique, and what we've discussed about Bitcoin will not apply to all other blockchains. Actually, when we talk about other blockchains, two new concepts come up. This concept is coin and token. So what is a coin? A coin is the native currency of a blockchain that you will use to pay for transactions specifically within that network. For example, if you want to send transactions on the Ethereum network, you'll need to have Ether coins, or simply put, Ether tokens, so that you can pay for the transaction. So what are tokens? Tokens are coins that don't have their own blockchain, but are created on the basis of an existing blockchain and are used for payments in some small network or within a small application. Look, we have, for example, the city of Moscow. Let this be our big blockchain. In this blockchain, we have our main currency, which is the ruble. So with this ruble, we can buy and sell anything we want. But within Moscow, we also have some separate applications. For example, the public transport app that includes the metro, trams, trolley buses, and so on. And in order to ride the metro, we can simply buy tokens for ourselves so that we don't have to constantly carry rubles around with us. And each time you approach the metro, accordingly, throw in a token. And in this example, accordingly, our coins are rubles. That is, this is the common currency of the blockchain. And tokens are already directly metro tokens, which we can use with you directly in decentralized applications. As for altcoins, if you want to read more in detail about different coins in crypto, you can visit websites like CryptoRank or CoinMarketCap. There you can find the current rates of all cryptocurrencies, see what a particular cryptocurrency is about, what its blockchain entails, who the development team is, and so on. We're not going to go into detail on this right now, but if you want to learn more about what crypto is, how to do fundamental analysis, what risk management is, and so on, we have a free course called Quick Start in Crypto that takes you from zero to knowledge in just 5 days. The link is located below this video. Go ahead, activate the bot in Telegram, and it will send you step-by-step lessons over the next few days, which will help you understand what crypto is and how to interact with it even better. Now that we've figured out what crypto is and how it works, a pretty logical question comes to mind. So, how can we actually use crypto in our everyday lives? In other words, how can it be useful to us overall? What's the essence of this? When you own fiat currency like rubles on your bank card, that money essentially doesn't belong to you. They belong to the bank, or to be more precise, the central bank or the state that issued them. And in doing so, you are essentially completely dependent on the state and the banking system. So, if the bank wants to take your money, freeze it or block it, they can do that without any problem. If you own cryptocurrency, for example, Bitcoin, then this is simply impossible. If you own one Bitcoin, it belongs to you as long as you hold the seed phrase for it. We will now talk in detail with you about how you generally store cryptocurrency, what are seed phrases, wallets, and so on. But unless you made a mistake yourself, then all the cryptocurrency you own belongs only to you. No one else has access to it. They can't take it, freeze it, block it, and so on. And this is a very important distinction. If you want to have access to your funds, regardless of what country you are in, what sanctions have been imposed on you, and so on. And this is essentially the first way to use crypto, just safe storage of your assets in your banks. Well, you might say, how can I even store my funds? Bitcoin was worth $16,000 yesterday, and today it's $90,000. It could crash. And you would be absolutely right. And that's exactly why there's a tool in crypto called a stablecoin. It literally translates to stable coins. So, this is a cryptocurrency that is pegged to the exchange rate of fiat currency. It is also on the blockchain. Yes, it has a controlling issuing entity, but it is stable and it is pegged to the dollar. The two most popular stablecoin cryptocurrencies are USDT and USDC. We have detailed videos on the channel about how stablecoins work and how they differ. Look, I'll definitely leave the link for you in the suggestions. But once again, if you want to store your money outside the banking system, then a stablecoin is a pretty good option. The second way to use crypto is for safe transfer of funds. Again, in the last couple of years, if you live in Russia or in the CIS countries, you may have faced sanctions imposed by other, not very friendly states. So, if you need to transfer money abroad, then SWIFT doesn't work and other banking systems don't work either. Okay, we take Bitcoin, we take USDT, and we just send them to another person no matter where in the world they are, whether in Africa, in Guadeloupe, in America, or anywhere else. And here's the most interesting part. If you're sending your money via SWIFT to another country, you usually get charged a minimum of $50 to $100 in fees for the transfer, and sometimes it can even reach several thousand if you have a large transaction. This transfer takes from 1 to 3 days. In cryptocurrency, the fees are fixed. On average, if you're transferring Bitcoins from one wallet to another, the fee is about $10. Yes, if the network is congested, it might be a bit higher, but it doesn't matter whether you're transferring 1 Bitcoin or 100 Bitcoins. $1,000,000 or $1,000, your fee will always be the same. If you're transferring USDT on the TRC network, for example, or on the Ethereum network, then your fee will be between $2 and $10, regardless of the amount you're transferring. And the most interesting thing is that the transfer will arrive in just 3 to 10 minutes, unlike the 1 to 3 days it takes for a bank transaction. Cool. Yeah, that's cool. And the third reason why you might want to use crypto is, of course, to make money. Look, cryptocurrency is really a very large, very fast-growing market, and you can actually make a significant amount of money on it. I've already mentioned our free training, Quick Start to Crypto, from scratch in 5 days. The link to it is below this video. Check it out, take a look. It goes into more detail about all the ways to make money. This training covers more than 10 ways to make money in crypto. We also have a separate detailed video on the channel titled 10 Ways to Make Money with Crypto. I'll leave it in the suggestions, so make sure to check it out. Now, let's go over the main ways to make money with crypto. The first way to make money is, of course, to buy cryptocurrency and hold it on the spot. So roughly speaking, here's how it works. We buy Bitcoin with you in 2022 for $16,000 and sell it, for example, in November 2024 for $92,000. This way, you can earn over 500% profit in 2 years. P-Belly for 2 years. In comparison, a bank deposit in dollars would have given you a maximum 5-7% during that time. Are there risks here? Yes, of course, there are. Bitcoin could have gone from $16,000 down to, say, $8,000, and you could have lost 50% of your capital. But that's the risk you have to take on if you want to get into crypto. And once again, if you're serious about getting into crypto, make sure to subscribe to our Telegram channel. There, I talk about my trades, which cryptocurrencies I'm buying, which ones I'm selling, and I share my thoughts on the market and what I plan to do in the near future. All of this is on our Telegram channel. The link is below this video, so go ahead and make sure to subscribe. The second way to earn in crypto is through futures trading. This is a very common method you have probably seen in Telegram channels. Somewhere else, different screenshots, having earned 100%, 500%, 1000%. But don't rush to throw all your money in, because futures trading is actually very, very risky. And if you want to trade futures, or if you generally want to buy crypto, I recommend starting by creating accounts on trusted and reliable exchanges. One such exchange is Bybit. I've been trading on it for over 3 years. One of these exchanges is Bybit. I've been trading on it for over 3 years. And if you want to trade crypto, I recommend using Bybit. Why? There are no sanctions for residents of the Russian Federation. The P2P service is operational. All the tools for trading are available. And most importantly, if you register using our links below this video, you can get bonuses of up to $30,000. And you also get access to our training on risk management and technical analysis. And you also get access to our scalping trades. So, if you want to trade futures, register on the Bybit exchange and you'll receive free training from us on technical analysis and risk management. Once again, all the links to Bybit and to claim bonuses are located below this video. The next, third way to earn in crypto is through airdrops, or what's called drop hunting. We also have a separate video on the channel about this, and I'll leave you a link in the suggestions. So what does drop hunting involve? There are projects in crypto that pay people for interacting with them. Well, the project needs to do some marketing, and so they give away their tokens. Some give away USDT, while others distribute their coins for various actions. Sometimes it's reposts on social media, sometimes it's certain activities on the blockchain, and so on. But if you currently have a small deposit, then airdrops and drop hunting are exactly what many people start with when getting to know crypto. And we continue to talk about how to apply blockchain and how it's used in our real lives. The first and most interesting application of blockchain is what's called smart contracts. Well, it's clear how it translates from English. Smart contracts. What is their special feature? The special feature is that a transaction under such a contract is automatically executed when the specified conditions are met. Let's break down what a smart contract is using an example. In fact, an analog of a smart contract has already been implemented when purchasing real estate. In Russia, for sure. I don't know how it looks in other countries. So let's say we want to buy an apartment, right? So let's say you're the buyer and I'm the seller, and we want to make it so that I receive the money only after the ownership is transferred to you. What are we doing? We go to the bank and give the money to the bank. In our case, the bank is definitely not blockchain. It can screw everyone over. They screwed us over like we were total fools. Let's imagine that the bank is a decentralized organization, meaning that's the only variable here that isn't perfect. So you give the money to the bank and I hand over the contract to the bank, stating that I am indeed selling you the apartment. And what happens next? Next, when the information from the Rosregister comes to the bank confirming that the apartment has indeed been transferred to you, I receive my money and you, accordingly, gain access to the property. If we talk about the decentralized application of smart contracts, it's currently mostly used in DeFi. This is the next area that we are going to discuss now. How are smart contracts used in DeFi? For example, we have decentralized exchanges where we want to exchange one cryptocurrency for another. Let's say exchanging ethers for bitcoins, bitcoins for USDT, USDT for ethers, and so on. But we need two people to meet and exchange cryptocurrency with each other. This happens precisely through the use of a smart contract. So we take one person, another person, connect them in the blockchain, exchange their crypto, credit one with UZT and the other with Ethers, and they go their separate ways. Also, thanks to smart contracts and DeFi, lending has become well developed. If you're familiar with the AVI service, then you probably heard about this. If you're not familiar yet, you can find it on the mentioned services like CryptoRank and see how lending works. Also, thanks to smart contracts, farming, staking, and other tools have been implemented in DeFi. If we talk about DeFi as a whole ecosystem, one of the most important cryptocurrencies in this field is Ethereum. What is Ethereum? The first smart contracts on the blockchain were created by the Russian-Canadian developer, you've probably heard of him, Vitalik Buterin. Yes, I am Satoshi Nakamoto. And since then, Ethereum has still held the second spot in terms of market capitalization after Bitcoin. It's precisely because Ethereum has successfully ridden this trend with the DeFi sector. So, Ethereum has staking, it has its own decentralized exchanges, there's lending on Ethereum and so on. Let's move on. It's time to figure out what an NFT or non-fungible token is. What is an NFT? It's an audio file, an image or text that we store using blockchain technology. But why is it called non-fungible? Look at the situation here. Let's say we can take a Bitcoin and split it in half. A piece of art like the Mona Lisa is worth $100 million. So we had one Bitcoin, it cost $90,000. We divided it into two half Bitcoins, each costing $45,000. If we take a piece of art, the Mona Lisa, it's worth $100 million. Dividing it doesn't mean each part is worth $50 million because it is valuable whole. An NFT is similar. If we split it into two parts, it won't be worth $50 million each, simply because it holds value only when it's whole. And actually, NFT is pretty much the same thing. What kind of applications can NFTs have? Well, first of all, it's digital art. So if you wanted to, for example, paint a picture, and you want it to belong only to you, with all that information on the blockchain, you can go ahead and paint your picture, turn it into an NFT, and then everyone knows that you created the painting, that it belongs to you, and you can sell it for real money. This trend and hype were very actively developed in 2021-2022. Next point, we can use NFTs for identifying people, meaning we can conditionally use them as some sort of IDs because each NFT is visible on the blockchain, you can see who it belongs to, and it can't be forged, and so on. Further, NFTs can be used in social networks to generate content. They can be used to manage various DAOs. DAO is a decentralized organization. That's something you'll learn as you learn about blockchain and so on. Overall, NFT is a really cool technology. At one time it was all the hype and many people lost money on it, but it is precisely as a technology that it has a place to exist. And most likely we'll see a new resurgence, NFTs. And the last definition we need to go over today is what meme coins are. It's a very popular story from the last couple of years. All these dogs and cats that give some crazy thousands of percent. Why do they even give these thousands of percent? And what exactly is a meme coin? Look, a meme coin is basically just entertainment. So if you want, you can think of it like a casino. So we have some kind of picture and people want it to be worth, let's say, 1 cent. Yes, a team of developers is brought in accordingly. Let's get to work, damn it. This coin is placed on the blockchain, a nice story is created around it, memes are attached to this story, and people just start buying these coins, and because of that, its price starts to rise even higher. There are infinitely many such coins. But just to reiterate, there are literally tens of thousands of cats, dogs, frogs, and coins featuring images of Trump, and so on down the list. If you want to participate in this casino, go ahead, but you have to accept all the risks that come with it. That is, memecoin once again is not a technology, it is not a blockchain, it is not something breakthrough, it is just me who e. That is, if you want to participate in this casino again, if you like to keep cats, dogs, I don't know, gnomes, frogs and so on in your wallet, no problem, participate. I myself sometimes buy all these wonderful pictures, but if you're looking for a bit more stable earnings, then it's probably better to steer clear of meme coins. We will soon release a separate video on the channel, so don't miss it. We'll dive deeper into what meme coins are. To buy cryptocurrency, you'll need a centralized exchange. I've already told you I recommend using the Bybit exchange. If you don't have an account, be sure to create one using the link below this video. Take all the bonuses from us, up to $30,000 bonuses, access to our scalping trades, risk management course, and so on. After you've created your account on Bybit, you link your bank card, buy USDT on the P2P platform, and you can use that USDT to buy Bitcoin. We have a detailed guide on our channel. The link will be, as usual, in the suggestions. There are several different ways you can store your crypto. The first way is to simply keep your money on the exchange. So you've bought cryptocurrency on Bybit and it's stored there. But there's a bit of a problem here in that the cryptocurrency actually belongs to Bybit, right? And that's not exactly what we're looking for when we come to crypto. I'll be honest with you, I keep my crypto on the exchange and I don't really stress about it. Yes, it might not be as safe as storing it on some decentralized cold wallets, but it's still a perfectly reasonable option, as you remember. The second way to store crypto is through so-called software wallets. This is a mask, a solution, an instruction, and there's also a training course called Quick Start in Crypto, which you can find through the link below this video. What's the essence of this? You install a special app on your phone or computer, and you're given a mnemonic phrase, a seed phrase, and thanks to this seed phrase, you gain access to your cryptocurrency. If you lose the seed phrase, then you also lose access to your cryptocurrency forever. No big deal. Well, no way. So you need to store the seed phrase in a safe place. Next, with this seed phrase, you gain access to your wallet, you're given an address, and you can transfer your cryptocurrency to that address. Once again, we have a detailed guide on the channel, so go ahead and check it out. And the third way is to use cold hardware wallets like Ledger, Trezor, and so on. Honestly, in the current situation, I don't see much point in using Ledgers, Trezors, and so on simply because, for example, there are risks of sanctions for residents of Russia and the CIS with Ledger. They want to operate sometimes and sometimes they don't. It's not entirely clear whether these sanctions will be enforced and how they will be implemented. Sometimes they want to work there, sometimes they don't want to work. And it is not entirely clear whether these sanctions will be implemented, how they will be implemented. Therefore, I don't want to take these risks on myself. So, in this video, we have covered all the other terms. What is cryptocurrency, blockchain, miners, bitcoins, tokens, coins, NFTs, and so on? If you have any questions left, be sure to write them in the comments. Just a reminder, if you found this video helpful, make sure to give it a like. And if you want to stay in touch with us, don't forget to subscribe to our Telegram channel. The link is also located below this video. See you soon.